Hey, Talk Tickers listeners, welcome back. We're diving deep today into Walmart's Q3 2025 earnings call.
You guys sent in the transcript and some extra data, so this is your cheat sheet to what really matters.
Exactly, and trust me, there's a lot to unpack here. Walmart's not just keeping up, they're smashing expectations.
I mean, we're talking a 6.1% jump in sales.
Wow.
Profits up 9.8%.
Huge.
And e-commerce, advertising, memberships are making some really interesting moves.
Okay, let's break down these wins. Just looking at e-commerce, 27% growth alone is massive. What surprised you the most in these numbers?
You know, it's not just the growth itself, it's where it's coming from. 75% of Walmart's U.S. market share gains. Get this, households earning $100,000 or more.
Well, that's not the typical Walmart shopper we might have pictured a decade ago.
Right.
So are they actively trying to attract wealthier customers, or is this just happening naturally?
It's a bit of both, I think. Walmart's always been about value, but now that value includes convenience, a wider selection of goods, and a shopping experience that's evolving rapidly. Think about it. Store-fulfilled delivery is a $2.5 billion a month business for them.
Wow.
They delivered over 2.1 billion items internationally, same day or next day, just this past year. That kind of speed and reach, it appeals to everyone, no matter what you're earning.
It's not just about the lowest price on everything anymore. It's about making the whole experience seamless and convenient.
Exactly. And they're doing it in some really innovative ways. Have you heard about that new Sam's Club they're opening in Grapevine, Texas?
Oh.
150,000 square foot store, no traditional checkouts.
Wait, what?
Scan and go and computer vision exits, that's it.
So you're saying you could walk out of a Sam's Club with a cart full of stuff and never even see a cashier?
That's the idea. It really shows their commitment to that frictionless experience, especially for members.
Speaking of memberships, Sam's Club US, membership income up 15%. And globally, those programs are key for loyalty, gathering data.
Yeah.
What can we learn from their successes, especially in markets like China?
China's a great example. Sam's Clubs there are seeing over 30% membership income growth, and get this, half their sales are digital.
Wow.
They're adapting their membership perks to what people there want: express delivery, exclusive product selections. It shows how important it is to tailor those programs, not just copy and paste from the U.S.
So it's like creating this global network of shoppers who are super loyal and generating tons of valuable data for Walmart.
Exactly. This data lets them personalize offers, optimize inventory, even predict what's coming next. Huge advantage in a retail world that's changing so fast.
And it's not just overseas. Walmart's using AI here in the U.S. too, right? Like to improve product catalogs and create a personalized shopping assistant. We hear so much about AI, but is it really making a difference for them?
Absolutely. They're using it to streamline everything, increase associate productivity, and personalize the shopping experience for customers. This isn't just hype. They're seeing real results.
And those results are showing up on their balance sheet, right? They raised their full year guidance for the third time this year.
Third time.
And we're not talking small bumps. Sales projected to grow 4.8% to 5.1%, and operating income that's profit from their core business up a whopping 8.5% to 9.25%.
Amazing.
Now, here's where it gets really interesting. Operating income is on track to grow 400 basis points. That's 4% more than they initially projected. That tells me they can invest heavily in these new things and still deliver fantastic returns.
You're that great.
All right, so we've established Walmart is crushing it, but before we get to the This Is Not Financial Advices segment, where we have some fun hypothetical trade ideas, I want to dig a little deeper into their general merchandise sales. They saw low single-digit growth in the U.S. Despite all these positives, what's the story there?
Good point. There's a lot of noise about inflation right now, but the key here is Walmart's expanding their marketplace.
Yeah.
They're attracting brands, a wider range of products, especially things like home goods and toy stuff that appeals to those higher income shoppers we talked about.
So even if their own branded stuff faces headwinds, they're bringing in new sellers, new inventory to reach more customers.
Exactly. They're becoming more than a retailer. They're a massive curated marketplace with more choices, more price points, and it's working.
Okay, we've covered a lot here. Let's take a quick pause, grab a refill, and then we'll be back for part 2, where we'll break down Walmart US, Walmart International, and Sam's Club in more detail.
Sounds good. Welcome back, Talk Tickers listeners. Ready for part 2 of our Walmart deep dive.
Let's do it. We talked big picture, but now I want to zoom in on their individual segments. Walmart US, Walmart International, and Sam's Club. How is each piece contributing to this success story?
It's almost like 3 separate engines powering this growth, each with its own unique strengths. Starting with the powerhouse. Walmart US. A 5.3% comparable sales increase. That's impressive, especially in a market as competitive as the US.
And don't forget, within that number, e-commerce sales surged 22%. Their store-fulfilled delivery model is really working. We mentioned it's a $2.5 billion monthly business for them. For our listeners who might not be familiar with retail lingo, can you quickly explain comparable sales and why it matters?
Sure. Comparable sales, or comps, measure growth at stores that have been open for at least a year. It takes out the impact of new store openings so you can see how the core business is doing. A 5.3% jump means they're not just holding steady, they're taking market share.
And they're doing it while also rolling back prices on thousands of items. That commitment to value is key, especially when so many people are feeling the pinch of inflation.
Absolutely. It reinforces their image as the place to go for low prices, and it works for a wide range of shoppers, from budget-conscious families to those higher-income earners who still want a good deal.
So the U.S. engine's humming along. Now let's talk about a segment I think gets overlooked sometimes. Walmart International. A 12.4% jump in sales when you account for currency changes is remarkable.
It really is, and it shows how Walmart's global reach is a huge asset, not just an afterthought. Markets like Flipkart in India, Walmex in Mexico, and their operations in China are all contributing to this.
I'm curious, what are some key differences between their U.S. and international strategies? Are they just copying the U.S. model, or are they adapting to local things?
They're definitely adapting. They have to. Consumer preferences, shopping habits, even regulations, they all vary from country to country. What works in Bentonville, Arkansas might not work in Bangalore, India. They're localizing their product selection, their marketing, even their tech platforms to connect with shoppers in each region. For example, they've really embraced mobile payments and social commerce in places like China and India, where those trends are way ahead of the U.S.
So it's not one size fits all. They're tailoring their approach to each market, but still focusing on value, convenience, and using their global scale.
Exactly. They're playing a global game, but with a local mindset. And it's working.
Now, on to the membership powerhouse, Sam's Club. Their U.S. membership income jumped 15%. They delivered a 7% increase in U.S. comparable sales, excluding fuel, and e-commerce sales soared 26%. What's driving this success in a world where everyone seems to be launching membership programs?
Sam's Club has a few advantages. First, they've been doing this for decades. They have a loyal customer base, a well-established supply chain, and a deep understanding of the warehouse club model. Second, they're not afraid to innovate. We talked about those new perks like express delivery and waived curbside pickup fees. Those little things add up for busy shoppers, and they make membership more valuable.
It's not just about getting a huge box of cereal for a slightly lower price. It's about creating a whole ecosystem of benefits that make membership seem obvious.
Exactly. And third, they're not letting their physical stores hold them back. They're embracing technology to make shopping smoother. Scan and go, computer vision, exits, curbside pickup. They're giving members multiple ways to shop, making it faster and more convenient. That Grapevine store is a great example of how they're changing the warehouse club for the digital age.
You mentioned earlier they delivered over 2.1 billion items internationally through same-day or next-day delivery. Are those logistics capabilities a key part of their success across all segments?
Absolutely. They've invested a lot in their supply chain, distribution network, and tech infrastructure. That lets them get products to customers quickly and efficiently, whether they're online or in a store. And it gives them an edge, not just against traditional retailers, but also against online giants like Amazon.
So whether you're in Arkansas or Argentina, you can count on Walmart to get you what you need when you need it.
That's the goal. They want to be the go-to retailer for everyone, everywhere, and they're building what they need to make that happen.
Okay, we've talked about U.S. operations, international expansion, and membership magic. Now let's zoom out and talk about a trend impacting all three segments: the blurring of lines between online and offline shopping. It seems like every retailer is trying to figure out omni-channel, but Walmart seems to be doing it better than most. Why is that?
It's because they're not just chasing trends, they're using their existing strengths. They have this huge network of stores they can use as fulfillment centers for online orders. They have loyal customers who shop both ways. And they're using technology to connect those two worlds seamlessly and conveniently.
So it's not just about a fancy app or offering curbside pickup. It's about making it all work together.
Exactly. They're thinking about the entire journey, from browsing to buying to getting your order, and they're making sure every step is smooth and consistent, whether it's online, in-store, or on their app.
We've talked a lot about their successes, but let's circle back to that question of general merchandise sales in the U.S. While they saw some growth, it was slower than in other areas. Is this a sign of weakness, or are there other things happening?
It's important to think about the bigger picture. Inflation is hitting certain categories harder than others. People are being more careful about spending, especially on things like clothing and home goods. But Walmart is addressing this in a couple of ways. First, they're really pushing their commitment to value. We mentioned those price rollbacks. They want people to know that even when things are tough, they can rely on Walmart for low prices.
So they're not just trying to out-innovate the competition, they're also playing defense by sticking to their core value.
Exactly. And second, they're expanding their marketplace. They're adding new sellers and more products, especially in those general merchandise categories. This lets them appeal to more tastes and budgets, even if shoppers aren't buying Walmart's own brands.
So they're creating a more diverse marketplace that can handle economic ups and downs and cater to more people's needs.
That's the idea. They're diversifying, hedging their bets, and making sure they're not too reliant on any one product or customer.
And this ties back to their membership programs, right? They're not just driving sales, they're gathering valuable data about what customers want, which helps them make better decisions about inventory, pricing, and what products to offer.
Absolutely. Those membership programs are a goldmine of insights, and they're using that data to personalize the shopping experience, optimize their supply chain, and stay ahead of the game.
It's really cool to see how they're using technology not just to sell more stuff, but to understand their customers better and make the shopping experience more tailored.
And they're not just doing this in the US. We mentioned Sam's Club is doing amazingly well in China with over 30% membership income growth. They're showing this membership model can work globally, but you need to adapt it to each market.
Okay, we've covered a lot in this segment, from their U.S. dominance to international growth to membership magic. What are some key takeaways for our listeners as we go into the final part of this deep dive?
Walmart is doing great right now. They're exceeding expectations in all areas. They're embracing technology to create a smoother shopping experience, and they're adapting their strategies to win globally.
And they're doing it all while staying focused on value, convenience, and a wide selection of products.
Exactly. They're not just reacting to change, they're shaping the future of retail.
All right, Talk Tickers listeners, we're going to take another quick break, but stick with us. In part 3, we'll get into their use of AI, their financial performance, and we'll finish up with that This Is Not Financial Advice segment, where we'll brainstorm some outrageous but potentially lucrative trade ideas based on what we've learned today. All right, Talk Tickers listeners, welcome back for the final part of our deep dive into Walmart's Q3 2025 earnings call. We've covered a ton, but there are a few more things I want to hit before we get to that outrageous trade idea.
Yeah, there's still some juicy stuff to unpack.
One that really caught my eye is their use of AI. They're using it for product catalogs, personalizing the shopping experience, even boosting worker productivity. For those of us who aren't, tech wizards, can you break down how AI is actually making a difference at Walmart?
It's not just a buzzword, it's a core part of their strategy. Think about it. Walmart has mountains of data from customer purchases, inventory levels, pricing, everything. AI lets them analyze that data and find real insights.
So they're not just collecting it, they're using it to make smarter decisions.
Exactly. They're using AI to optimize their supply chain, predict demand, personalize product recommendations, even identify potential fraud. One cool example they mentioned is a tool called My Assistant for their home office associates, available in multiple countries. It uses generative AI to give quick access to info and streamline tasks.
So it's like having a super efficient virtual assistant.
Basically.
That sounds incredibly useful, especially for a company as big and complex as Walmart. So AI isn't just robots in the aisles, it's about making everything smarter and smoother.
Exactly. And it's a huge part of what keeps them competitive. They need to be as agile and data-driven as possible to keep up with companies like Amazon, who are also all in on AI.
Now let's talk bottom line their financials. We know they're beating expectations, but let's dive into the numbers. They raised their full-year guidance for the third time this year, projecting operating income growth of 8.5% to 9.25%. For listeners who aren't finance pros, can you explain operating income and why it matters so much?
Sure. Operating income is essentially the profit from their main business, before things like taxes and interest expenses. It's a measure of how profitable and efficient they are. The fact that they're projecting such strong operating income growth, especially after raising guidance multiple times, means they're not just growing, they're becoming more profitable as they grow.
That's a great sign for investors. Shows they're managing costs well even with all these new investments.
And they're not just sitting on those profits. They're returning value to shareholders through dividends and buybacks. Plus, they're investing in their employees with higher wages and better benefits.
Striking that balance between rewarding investors, taking care of their people, and fueling future growth.
Yep, it's a long-term view, which is key to lasting success.
Now, we can't talk about Walmart's future without talking about the competition. They're facing challenges from all sides. Amazon, Target, even tech companies like Shopify that help smaller businesses sell online. How is Walmart positioning itself to win in this crowded market?
They're definitely not standing still. They're changing their business model, becoming more than just a store. They're building a huge online marketplace, expanding their financial services, and investing heavily in technology and logistics.
So it's not just about price anymore. It's about convenience, selection, the whole experience.
Right. And their global reach is a big advantage. They're entering new markets, diversifying their income, and learning from how people shop all over the world.
We've focused on the positives, but it's fair to say there are risks too. They mentioned pressure on profit margins from things like rising healthcare costs. How worried should investors be about that?
It's worth keeping an eye on for sure. Healthcare costs are always changing, and they can have a big impact on retailers. But Walmart's taking action. They're negotiating better prices with suppliers, expanding their own store brands, and using technology to streamline their healthcare operations.
So they're not ignoring it. They're tackling those challenges head on.
Exactly. Being able to adapt is crucial for long-term success.
All right, I think we've covered it all. Performance, strategies, the competitive landscape. Now, the moment you've been waiting for. This is not financial advice. Time to put on our speculative hats and brainstorm a crazy, maybe lucrative trade idea based on what we've learned.
Big reminder, Talk Tickers listeners, this is all hypothetical, just for fun. We're not financial advisors, so don't take this as investment advice.
Disclaimer out of the way, let's get wild. Walmart is clearly going all in on international growth, especially in places like India and China.
Totally. They see huge potential there, and they're putting their money where their mouth is.
Here's where it gets outrageous. What if we take a leveraged position on that international growth? Think options on their international segment's performance, or even investing in companies that benefit directly from Walmart's expansion in those markets.
Now you're talking high risk, high reward, but the potential gains could be huge, especially with Walmart's track record and their focus on going global.
Of course, this is just a thought experiment. You'd need to do your own deep research into the specific risks and rewards.
Absolutely. But it's fun to imagine.
All right, Talk Tickers listeners, that wraps up our deep dive into Walmart's Q3 2025 earnings call. We've covered their amazing performance, their innovative strategies, and even cooked up a wild trade idea.
We hope you learned some valuable insights into Walmart and the retail world in general.
Remember, always do your own research before investing.
And until next time, stay curious, stay informed, and keep those trading minds sharp.